Welcome back to the NITE Economics YouTube channel, and today we're going to be looking at a few things: S&P 500, Bitcoin, and gold. And my overall base case is essentially that the run in gold is not over, and I think we're going to actually see potentially, later this year, a decent pullback here in the S&P 500. I'm not sure how much it could pull back, but anywhere between 5, maybe even up to 20% pullback. And sorry, I meant to say maybe closer to 10 to 20%, something like that. From current price levels, why isn't this working? Current price levels, 10% we'll see it around 6,000. And 20% much bigger. We'll see it above, just above the lows of last year in like around April or so. And this is likely going to come in around April time, because that's kind of the S&P 500 really kind of shows weakness around that period, right? So like you see here, we had this. Well, I'll start to pull it back early into the year. So you could see here in 2021, you had a high in December, and then it came down in January, and into February, pulled back up in March, and then you had another dump into April, and then it actually continued into the summertime, and then it turned around. And let me just turn off this this Federal Reserve chart overlay on top. So yeah, so I could expect something like that to happen. And to me, and I've spoken this on my channel a few times, I feel like the S&P 500 is looking very sluggish. I think it's starting to wear out its welcome at the highs. It's been in these highs for pretty much all the way since like this, let's just call it early December. So we're in here, we're December, all of December, January, and now we're into the third month. And it's just starting to look sluggish. And if you actually look at it from like October, it's pretty much been more or less at the highs. There's only from the high in October to the most current highs, it's about a 1% difference. So it's pretty much October, November, December, January, 4 months that the S&P 500 has been at the highs essentially, without moving considerably higher to the upside. And usually when you see something like this in the S&P 500, it's usually telling you there's going to be a pullback. Not every time, but most of the time. And you see that over here. This is probably the most clear example of the S&P 500 just spinning its wheels for, looks like, about, what is that, 1, 2, 3, 4, 5, 6 months before you had a pullback. And this was a decent pullback, like it looks like nothing on the chart, but it's actually a pretty decent pullback. It was about, 11%, and then about 14%. And this was back in 2014. And I think it's looking very, very similar over here, with just kind of hanging out at the top. Or very close at all-time high and not doing anything. Even here is quite similar. You have like about 4 months of it just kind of hanging out at these highs, and then you had a massive pullback over here. This one was a little bit different. Here, this was pretty much quantitative. If we put over the overlay of the Federal Reserve's balance sheet, this was pretty much when the Federal Reserve said, okay, we're ending quantitative easing. Because of inflation and these sorts of things. And then you had a massive panic, I guess, in the market, and it sold off for a couple of months before saying, oh, you know what, it's actually not that bad, and it continued to move to the upside. So I think it's starting to look very, very toppy. It's looking sluggish. I think the S&P 500 is starting to wear out its welcome at the highs. You could see here was also very similar, right? You had 1, 2, 3, 4, 5, 6, 7, about 7 months at the highs before it made a massive move or pull back to the downside. And this happened in around 2001, and that was the dot-com bubble, and it burst. And the S&P 500 moved significantly. I'm not saying we're going to get a move like this, but can you imagine that, a 50% move to the downside. Then of course, this chart here, or this line over here, the blue line, is the Federal Reserve balance sheet. So moving up to the right, it means the Federal Reserve is taking on or buying US bonds. And when it's contracting, it's essentially selling, or I guess it could be selling them to private banks, or they could be letting them expire, so they're getting paid from the Treasury for holding those bonds. And as you could see here, obviously the Federal Reserve couldn't let the stock market keep falling this much, so they had to turn on the money printers. Although I'm not too sure, because this chart only goes, in terms of the Federal Reserve balance sheet, only goes to December 2002. But you could see it recovered, and it pretty much just went back to the same previous high there. And then over here, if you remember, it was the 2008 financial crisis in the United States, and you had another big pullback, a bigger one than the first one. And then if you were around during that time, so it's more than 50%, almost 60%. And if you were around that time, I guess pretty much from here, you had QE1, 2, 3, and then I think there was a fourth one, if memory serves correctly. So the Federal Reserve pretty much went from having a balance sheet of less than $1 trillion all the way to 4.5 trillion. So it essentially did a 4.5x. And a lot of the worries during this time was that the US dollar was going to go to zero and there was going to be hyperinflation, and that didn't happen. Inflation was actually not that large of a problem. Not to say it wasn't a problem, but it wasn't a scenario of hyperinflation. But as you could see, when the Federal Reserve does expand this balance sheet, there is some level of correlation with that, with what the S&P 500 does. And as you can see, ever since they've turned on the printers significantly, for the most part, it's been in a long bull market. And in my opinion, you haven't really seen a significant pullback pretty much since the year 2009, right? I guess 2008, but you didn't see the low was in 2009. So we haven't seen a significant pullback outside of this Corona dump, and I guess you could say this one here in 2002 as well. So I think, we're due for a decent one, somewhere between, 10%, which is not that big, but, maybe 20% at some point. And again, a 20% pullback from current levels will bring it just above the lows of last year around April. So we could expect something like that. And now I'm going to briefly talk about Bitcoin. I think I also have the S&P 500 laid over that chart. Let's take a quick look. So here I wanted to talk about how there is definitely some level of correlation in when the balance sheet of the Federal Reserve is expanding and when you see bull runs in Bitcoin. And this is more obvious if you look at all the other cryptocurrencies, excluding like the top 10 or so. You definitely see that there is a correlation. I'm not going to do that right now. I guess you're going to have to just take my word for it, but I've seen this chart before and I'm too lazy to do it right now. But essentially, when there's easy money moving around, splashing around, you're going to see a bigger bull run, right? You're going to see larger bull runs. Here, there was a bull run. As you can see, the Federal Reserve was not expanding their balance sheet, but they were moving sideways, and they definitely were not contracting their balance sheet, right? And you see this move to the upside. Once the contraction begins, pull back, right? Then the balance sheet starts to expand. You have this bull run here. Balance sheet contracts, pull back, but then it changes here in the most recent bull run, the one of pretty much from 2020, end of 2022 all the way to last, I guess, October. You see Bitcoin had this run over here, but during this period, the balance sheet of the Federal Reserve was actually contracting. So you don't necessarily need the balance sheet of the Federal Reserve for you to have a bull run specifically in Bitcoin, because as you might know, there's a lot of ETF interest, there's a lot of big money essentially trading, I guess, other financial instruments that are based off of Bitcoin. So you're going to definitely see bull runs like this. But when you have periods of the balance sheet expanding, I think you will see bigger moves on Bitcoin into the future. And I think that is what's going to be the catalyst in order to significantly turn the printers back on in the Federal Reserve and move it to the upside. Would have to be some kind of a larger pullback in the S&P 500 or something else that would scare the banking system, if you will, to allow them to have a reason to turn on the money printers. At the end of the day, we live in a debt-based system, and if the balance sheet and if debt is not growing significantly, you're going to have things like this, like I've showed you in the S&P 500, where it starts to stall at some point. I'm not saying it can't move to the upside, it definitely can, but you're going to see stalling at some point, and then you're going to see a pullback. And when that happens, whether it's through Federal Reserve, through a downside move in the real estate market, whether it's a downside move in the S&P 500, your traditional stocks, this is going to scare big money and big banks, and the American economy is going to suffer to some extent, and they're gonna, the people that control the monetary system are gonna turn on the money printers, and that's historically what has been the case. So I do expect some kind of a bull run or a larger bull run to happen in the next Bitcoin bull run, which I would say will probably begin sometime in 2027, and it'll probably end sometime in 2028/2029. And I do expect it to be a bit more explosive to the upside. I do expect Main Street to jump in and push Bitcoin to higher prices, right? Maybe we could see a move more quickly to, the 200, 300, maybe even the $400,000 mark. This is not a prediction. I'm just throwing random numbers out there, right? But I think we will see bigger moves when you do see the balance sheet expand. There'll be more easier money out there, and especially if Main Street feels like they are wealthier, right? Maybe we will see a scenario where the government steps in and starts handing out money, stimulus money out to Main Street again. I'm generally not a big fan of this because I think in the long term it creates a lot of problems, but given the history of what governments do, I would not be surprised if they would do this. So I'm not trying to say that these things are good or they're bad. I'm just trying to say that these things are likely to happen into the future because we're in a debt-based system in the balance sheet, and more debt needs to be printed in order to keep the party going, right? So yeah, I could see this moving into the future, and I do expect some kind of a pullback, bigger pullback in the S&P 500 at some point this year, if not early next year. And part of it is based off of what's happening with the Federal Reserve's balance sheet. I do think at some point they're going to start turning the printers back on, and we should expect pullback in pretty much everything, and then over the next couple of years, significant upsides from there. Anyways, if you guys are liking the content, drop a like, subscribe, and I'll see you guys next time. Take care. Have a nice day.